Hello there today, viewers. On behalf of the Market 360 advisors here at Stuart Peterson, I'm Bob Davenport, and this is your Dairy Week in Review for July 25th, 2014. So to start out, let's take a look at where our CME dairy components settled at the conclusion of Friday's trade. It was a bit of a down week here for cash cheese, with blocks settling at $1.97 even, down 5 3/4 cents. Barrels settled at $1.95 1/4, down 11 3/4 cents. And cash butter settled at $2.59 even, up 11 cents on the week. August whey finished at 68 3/4, up 1 1/4 cents. And August non-fat dry milk settled at $1.77 even, down just half a cent on the week. As for Class 3 futures, it was another up week overall here, with the August contract settling at $21.45, up 12 cents. September settled at $20.72, up 39 cents on the week. And that now puts our 2014 average price at $21.51, up 4 cents. So let's take a look at what we saw in the spot markets this week. Here we have a weekly chart of the block barrel average. Now, the beginning part of this week, Monday through Wednesday sessions were pretty strong overall. The buyers were still willing to bid prices up and pick up any loads that the sellers were willing to offer. However, Thursday and Friday's session, the sellers finally caught up with those buyers here and started offering faster than the buyers were willing to pick up carloads of cheese. So that put some pressure on things, and on the week overall here, the block barrel average did sell off 8 3/4 cents. It put in a high of 204 even on Wednesday, and that helped to support that early week rally on Class 3 futures as well. But again, Thursday and Friday sessions were a little bit weaker, and the sellers really dominated the cash sessions there, so that led us to sell off that 8 3/4 cents, which you'll see in a little bit also put some pressure on Class 3 prices Thursday and Friday as well. So let's shift over to Class 3 now and take a look at our second month contract, which is currently the August contract. And here we have a daily chart of August milk. Now you can see that since we bottomed out 2 weeks here, the August contract really had some good strength here. And 9 out of the past 11 trading days, this is leading up to Wednesday's high, were all up days until we retested August contract high of 21.94 on Wednesday. And again, that early week rally really supported by some strength that we saw in the spot markets, with cash cheese being supportive, but also cash butter, which rallied up to $2.62 a pound here. That's a new high for the move. So we did reverse course on Thursday and Friday again, and both cash cheese and butter pulled back. So that put some pressure on things here in the Class 3 market. We still were able to post gains on the week. However, the August contract did settle 12 cents higher on the week, but again, we were down 49 cents though from the midweek high. So going forward here, things to focus on continue to be the spot markets. If cash cheese and butter can hold up, that should help to limit any losses in Class 3. But if we see any significant pullback in cash cheese or butter, I think that's going to put a lot of pressure on the nearby Class 3 contracts, specifically August and September. Those are the contracts that have really tacked on quite a bit of premium here over the past couple of weeks as they've gotten support from cash. So take away that cash demand, and I think we'll start to see some of that premium start to erode out of those nearby contract months for Class 3. So let's take a look at some fundamental factors with the milk market here. We did get our June milk production report out last Friday afternoon, and it showed that milk production in the 23 major states for the month of June came in at 16.2 billion pounds. That's up 2% from June of 2013, which is marked by this red line on the chart here compared to the green line marking 2014. So that's 2 months in a row now where we have seen some pretty solid growth on a year-over-year basis. However, you can see that we are still within that normal seasonal decline in production, though. From May to June, we see a pretty nice pullback in production, but production is picking up overall again with that 2% increase, which is pretty typical for a year-over-year increase. Now let's take a look at what the herd has been doing here. Now, going back to last year, due to the sequestration, we didn't really have accurate cow numbers, but we have resumed those cow numbers. And as you can see here, the herd has really been increasing going all the way to January of 2014. We're on a little bit of a slower increase through March, but you can see that there's really been a lot of growth here now over the past few months, adding about 10 to 11,000 head per month since the month of March. So for June, the dairy herd came in at 8.57 million head. Now that's an 11,000 head increase from the month of May, and we also saw an 11,000 head increase from the month of April. So definitely on a steady increase as far as herd growths go. So if we continue to see that type of increase in the herd here, we could expect to see maybe a little bit more of a pickup in production going forward as well. And that's going to do it for us here today. So on behalf of the Market 360 advisors here at Stewart Peterson, thank you for watching and have a great weekend.